Hi, so up until this point, you've done a transaction analysis on certain business transactions where you identify two or more accounts that are affected and the amounts that those accounts have changed. Right, and we did them in that balance sheet equation. We kind of did that A equals L plus SE, and you identified where the accounts were they in assets, were they in liabilities, or were they in the equity section, and did they go up or down, so you would put them as a negative or a positive depending on whether the account changed for the positive or negative. Well, now what we need to do is we need to officially record them the accounting way, and the accounting way is to create this thing called a journal entry. And let's first start about how does a journal entry look and what are the rules around the journal entry. And let's look on this side. So if you should either go to Canvas or in Connect, and I would recommend actually printing out these worksheets and follow along with me, maybe writing this out. But the most important part about the journal entry here is the format. And if you see what we're doing here is you have two lines on the journal entry. On the first line, you have an account name, and then to the right of that, you have an amount, okay, and that'll be your dollar amount. And then on the second line, you have an account name and you have a dollar amount. Now, if you remember from the transaction analysis, you also had account names and dollar amounts. So basically what we're going to do is transfer whatever we did in our transaction analysis last week and move it into this format, right? One of the accounts will go here. One of the accounts will go here. Most transactions only had two accounts. Some had more. But for the ones that have two accounts, you're going to have one here and one there, and then you have the amount there and the amount there. So it's pretty simple the way you set these up. And then let's just go through a couple of the other rules here. Every journal entry, just like every transaction, because a journal entry is a transaction, you need at least two accounts. You need at least one debit and one credit. More on that when we talk about these rules in a second. But remember that on your journal entry, at least one debit, at least one credit. And then these amounts over here, so rule number 4, these amounts must be entered as positive numbers. So, if you remember, there were some transactions where you paid cash and you would put on the transaction analysis when you did this A equals L plus SE, you would put the cash as a negative number. Well, in the journal entry, we're going to make sure that that number is entered as a positive, even if the cash account is decreasing, or even if whatever account you put in the journal is decreasing. And then the last rule here is debit amounts must equal credit amounts. More on that once we talk about debit and credit. And then I'll put one more rule in once we're done with the debit and credits too. So now let's start building out the debit and credit rules. Now that you have the journal entry rules in place, let's think about debit and credit rules. And the first thing I want you to think about here is I have two definitions here. I have debit means on one side here, and I have credit means on the other side. And if you've never taken accounting before, you may think of debit and credit like in relation to a debit card or something with your bank, or like a debit card might be a good thing because you're not using, you're not borrowing money, and credit might be a bad thing because you are borrowing money. Debit good, credit bad. Debit might mean up to you. Credit might mean down. Just erase your memory from all that stuff. Erase it. Forget everything you ever learned about debit and credit, assuming you never took an accounting course. And what you want to learn in this class and what you want to remember when we're talking about journal entries is debit means one thing only. It means the word left. L-E-F-T. It means left. And credit means one thing only, and that means right. And how does that fit in here? Look at your journal entry format. If you notice the format here, look at the top line. See how the top line's indented to the left here? And then there's two amount columns, and the top line uses the left amount column. And look at the bottom line. Notice how the bottom line is indented to the right and uses the right-hand amount column. Well, based on these rules, debit means left, credit means right. Which one do you think is the debit line? Clearly, the left side line is going to be your debit line on a journal entry. So the top line here, which is on the left, and the amount that shows up on the left is your debit line, and the bottom line is your credit line. Account name, amount. All right, so that's what we're dealing with here. Debit, credit, debit, credit, debit, credit, okay? And when I say at least one debit, at least one credit, then your journal entry needs to have at least one account on the top line and at least one account here as the bottom line credit. And then amounts can be entered as positives, so that's going to be here. These need to be positives. And then our debit amounts must equal credit. So if I have $100 here, I need to have $100 here. Remember, you could have 3 lines. You could have 5 lines on a journal entry. But at least one of those lines must be on this left side indented as a debit. And then you can have the other 2 lines as credits right below. Or you gotta have at least one credit line. You can have a couple debits on top. So those are your rules. Now, when we're talking about debits and credits, there's one more rule I want you to memorize before we start going into the journal entries from the first question here. Actually, two rules. The first rule is this: cash in debit. Remember, debit means, whoops. Let's fix that. Remember what debit means. Cash in debit. Debit means left, top. Cash in debit, top. Debit, left, top. Cash out, credit, right. Credit means right, bottom. So what am I saying here? When you do a transaction analysis, one of the easiest parts of that transaction analysis is, did your bank account go up or down? So if my bank account goes up, I have cash coming in. And what am I going to do with that cash? If my bank account's going up, where am I going to put that on the journal entry? Debit top. Remember, the top line of a journal entry is a debit. While we're at it, rule 6 on the journal entry is debits on top, credits on the bottom. Right, so now this rule makes sense. That's why I kind of delayed explaining this rule. Anytime I have a debit entry, it needs to go on top of the journal entry. Anytime I have a credit, I need to have it on the bottom. So if I have 2 credits, I need the last 2 lines to be credits. If I have 2 debits, the first 2 lines need to be debits, and the last line would be a credit. But most journal entries are going to have just 2 accounts. So the top line should be debit, bottom line credit. Okay? And anytime I have cash, so cash is the easy part, get that out of the way, right? My cash, if it comes in, boom, put it right here on the top line. If my cash is going out, boom, put it on the bottom line and put the amounts right next to it. So let's go to the journal entries for examples here. We're going to follow these rules, and we'll try a couple that are on the question 1. So here's the first entry, and we did this in the last module here, the last part of the module. We did all these transactions. These are all reviews, right? And we did the hard part on all these, which was identify the accounts that are affected. So if you can do this analysis that we did in the last part of the module, that's the hardest part here, right? Because we identified that I have a cash going up, I have common stock going up on this transaction. Right? I'm not even going to review the transaction. You know this transaction by now. If not, go back to the other assignment and review the transactions. What we need to worry about is our debit and credit rules here. And if you remember from your first page with those notes, your first page says, anytime cash goes up, so I have cash in, debit, top. And I want you to keep remembering that. Cash in, debit, top. Cash in, debit, top. Well, I got cash in. Cash is coming in the bank. Remember, the investors are giving the corporation cash. So the corporation received the cash. I want to record the cash on the top of my journal entry. And then I'll just take that amount, that $20,000, and I'll put it in the amount column. Right? And I got my left side here. There's my debit. Left side amount is $20,000. Well, every journal entry, look at your rules on the journal entry. Keep that page right next to you. Every journal entry needs at least 1 debit and 1 credit. Each journal entry needs at least 2 accounts. There's 2 accounts in this transaction. Where's the other account go? It has to go right here. Right? I need something else right here. And that's where the common stock goes. I need 1 debit, 1 credit. I memorized that cash coming in gets the top line, gets the debit top. So then the common stock, the other account, must be on the bottom. That's the way it goes. And what we did here is we created another rule, and this will be rule, I'll fill out these rules, I'll show you these at the end of the video, but your rule number 7, right, is going to be that stockholders' equity increases, that's going to always be a credit. Anytime you have a plus sign on this stockholders' equity column, you're going to be putting the account and the amount on the bottom line for credit. Right, so let's go to the next one. Let's follow that same rule. Remember, cash in, debit top, cash out, credit bottom. Is cash coming in or cash going out? Cash is coming in. I'm increasing my cash. So cash in, debit top, I'm just going to move this right to the top line here. So I'm going to type in the cash, and I'm going to put the amount on top. I need something on the bottom. My only other account is notes payable. Where do you think it goes? It's got to go on the bottom. So I'm going to put notes payable on the bottom. And I'm going to put the amount next to it here in the credit column. Right, I have a debit column. Here's my debit column. There's my credit column. Debit, credit. So now what other rule did we figure out here? Notes payable is a liability. The liability is going up. I have a liability increasing here. You don't have to, remember, you don't have to put these in here. I'm just showing these for your benefit, right? You don't have to put these little parentheses pieces. But I want to show you what happened here. You have a liability going up. And what rule you need, and this will be rule number 5 on your first page. Any liability that increases, that's a credit. Simple as that. Now, we don't have to memorize that on this transaction because you memorized that cash in is debit top, and you know you have one other account and it goes on the bottom. And that's the way we're doing debits and credits here. All right, so let's do the next one. Paid $10,000 cash to buy a truck. Look what's happening here. I got a minus on my cash and I got a plus on my equipment. So my cash is going out. What was the rule that I told you? Cash out. Cash out, credit bottom. And look what I did here with the 10,000 because there's another journal entry rule that says don't put a negative number here. What we're doing is by virtue of the fact that this is a credit for cash, we're saying that the cash is going down. So you do not put a negative here. You put the amount as a positive number. Right, and I have that asset, I had cash out, credit bottom, and now I got an asset, equipment, going up. Where do you think that goes? Well, equipment is going to take the top of the journal entry for $10,000. Right, so I have an asset increasing here. Now, I put this in as rule 3 on your first page here. Any asset increase, so an asset plus, right, is going to be a debit always. You're always going to put any asset increase on the top line of the journal entry. But really, it's the same rule as the cash in, debit top. Cash is an asset. Cash is increasing. Cash goes on top. So any asset that increases, I got the plus sign right here. It's going to go on the top of the journal entry, and the amount's going to go there. Right? And then just keep in mind, I'm going to put a little arrow here. Again, you don't put these arrows in. I'm just showing you. Right? The equipment is $10,000 going up, and the debit and the credit for cash is showing $10,000 going down. Right? And remember here up top on the notes payable. Look how the credit for notes payable showed that the notes payable is increasing here. So, I think my point that I'm trying to make here is that a credit can mean increase and it can mean decrease. Just depends on the account. For liabilities, a credit means increase. For assets, a credit means decrease. Okay, just keep that in mind. All right, let's do the next one here. Purchase $400 worth of grooming supplies on account. So we just made a rule that said any asset that increases is going to be a debit. I got an asset increasing. I'm going to put supplies on my debit. I'm going to put the $400, right? I got an asset increasing here by $400. And then my accounts payable. Remember the rule from letter B, right? You got notes payable. You kind of see it up here. Notes payable is a credit. Notes payable is increasing. So I have a liability increasing. I put it on the bottom line. Here's another liability that's increasing. Put it on the bottom line. So I'm going to go AP for this. Let's keep it simple here. AP. So like another liability increasing with the credit. So that was rule number, did we put rule number 5 on there? Rule number 5 is liabilities increase with a credit. Rule number 5 on the first page. Let's go to the next one here. We pay $600 in advance to cover insurance for its truck from January 1 to June 30. And look what we got here. You got 2 assets. Cash out. Make a negative $600 for cash. What did I tell you about the rules? Cash in, debit top, cash out, credit bottom. So cash out, I'm going to put cash on the bottom here, $600. The cash is going down, but again, positive number. Do not put it in as a negative. And then what's my other account? Prepaid. Where do you think that goes? Well, it's got to go on top here. Prepaid insurance goes on top, $600. Right? So I got an asset increasing, right? Asset increasing. I really got an asset decreasing here. Good. And it's easy because we memorize cash. And this next one's going to be easy too. We're going to memorize cash here, right? Groom 30 dogs at a rate of $40 per dog. So we did $1,200 worth of work. We already identified. We did the hard part here. We identified that was service revenue because we delivered a service. And remember that the cash is separate, right? We also collected cash. Delivered a service, earn the revenue. Or record the revenue. Collect the cash, increase your bank account. 2 different things happening. Well, what's the rule? Cash in, debit top, cash out, credit bottom. Cash is coming in, debit top. So service revenue has to go somewhere else. Where does service revenue go? It has to go on the bottom. And why? Well, what's service revenue doing to your equity? You got a stockholder's equity increase here. So any stockholder's equity increase is going to go on the credit side. That's rule number 7. Rule number 7. I'll show you these rules when we're done the videos, but the rule number 7 on your journal and on your debit and credits is any stockholder's equity increase is a credit. And this confuses a lot of people, so don't get tripped up here, right? You think, hey, cash out, that's good. Cash in is a debit. That's a good thing. Well, service revenue, that's also good. Shouldn't that be a debit? A lot of students think that, and your gut is, it's not a bad thing for your gut to think that, right? Revenue's good. Maybe that should be a debit just because cash is, good. Well, it's two different things, right? And a journal entry has to have two accounts, has to have one debit and one credit. We said the hard rule is cash in has to take debit top. So if we collect cash and deliver some revenue, cash gets the top of the journal entry. Cash wins on that. I need a credit. Service revenue gets the credit. So remember that the revenue is going to do the opposite of what the cash does in the journal entry. Keep that in mind. And both of these accounts are going up, right? The credit, this is a good thing, right? Credit is good here. Debit is good. Well, look at this. A credit to cash on this journal entry is bad. All right, so you kind of got to keep in mind that debit can mean good or bad. It can mean up or down. You just got to follow these rules and really start with that cash rule. I think that's going to help you get through this. So the next video, we'll go through the remaining transactions.